what is your main takeaway? I mean, do you see a major regulatory shift around a stablecoin in China?
I do, certainly in Hong Kong, right? In mainland China, cryptocurrencies have generally been not allowed. And in addition to that, pretty much anything sort of derived off or built on top of these crypto ecosystems hasn't been allowed either. That potentially might change in the future. China's obviously had a very successful pilot program with the digital renminbi within the domestic environment. And you can see there Hong Kong is taking a good lead, both in terms of the general legislation and some of the detailed rules that are being published. It's very progressive and it's very up to date compared to what's going on in the rest of the region and the U.S. market.
And one of the guests that we were just listening to from our recent interview touched on this as well. But China has, very tight control on its capital flows, and there is also potential surveillance concerns as well. So this potential lack of trust, perhaps, in yuan-based stablecoin. Do you see that happening as well compared to what the dollar is based on?
So there's a big element of like geopolitical competition going on right now. Today, 99%, more than 99%, in fact, of all stablecoin transactions in the entire world are US dollar based. Now, our own forecast says that by about 2030, that's going to fall to maybe 70%. That assumes that governments will have implemented policies which allow people to transact, settle trade, and that businesses are adopting this technology. So my expectation is that dollar dominance will decrease, but it's still very, very strong. And of course, the market is just growing much, much larger with stablecoin legislation now in the U.S. The European Union has this covered. You've got Singapore, Japan, South Korea, and Hong Kong. So almost every major global market has some form of stablecoin legislation. And in most cases, that covers both local currency stablecoins and US dollar denominated stablecoins.
How important is it for non-US countries to have their own currency-based stablecoins?
I think it's going to become very important. If you look at Tether, they're a good example. I think I've seen estimates that say they're about the 7th largest holder of U.S. government bonds in the entire world. So if you think about all of those people out there in the world, like buying lots and lots of U.S. dollars, and that's feeding into U.S. banking system, it's feeding into demand for the U.S. dollar, it's buying U.S. Treasury bonds. If you are not in that cycle, if your government doesn't have their own stablecoin and people are not buying your government bonds, you could find the market for your capital and the ability to manage capital into your country to be diminished. And of course, the provisions in the U.S. regulation that give the government extraterritorial power, they can work both ways. Other governments can do the same thing, but that means that you have to have a stablecoin that's denominated or sort of managed inside the four walls of your own country.
Paul Martin here. Let me quickly jump in with a question. You mentioned Tether, and this is a really interesting fact here. 7th largest holder of U.S. Treasuries. I did not know that, which kind of leads me to another question I have with stablecoin. I mean, on the surface, it sounds like almost a perfect commodity, right? But with stablecoin balances, right, unless you can offer or be able to show a yield, what's it going to be good for, you know?
So right now, the value proposition around stablecoins is heavily driven by payments, especially cross-border payments. You know, we've seen data. We know for a fact that you can basically cut your payment transmission cost by about 99% by shifting from traditional banking and wire transfers into a stablecoin environment that costs almost nothing and also settles almost immediately. So we're already seeing companies and individuals looking at adopting it for these low-cost cross-border payments. When we think about scaling that up, we see big implications for how governments are going to manage their, we see big information about how companies are going to manage their cash on a global basis.